A new report from the FTX bankruptcy team says the company owed its customers $8.7 billion after commingling and misusing their deposits. Joining us now to discuss is Wilk Auslander LLP partner Eric Snyder. Welcome to the show, Eric.
Thank you for having me.
Thanks for being here this morning. Now, your specialty is in bankruptcies. The new FTX CEO, John J. Ray III, has said this is one of the worst cases he's ever dealt with. You've read the report. Talk to us about the takeaways and where this case kind of stands in the realm of bankruptcies.
So in light of, and this has probably been good for FTX, listening to the previous speaker, Bitcoin and Bitcoin-related products have held their value and increased. So when the bankruptcy came about late last year, there was concern that many of those coins were illiquid. But it seems like the trustee, John Ray, has recovered over $7 billion. So if the number of creditors is approximately 8 billion and change, it looks like that most creditors will receive pretty close to all of what they are owed, which to me is the most important thing, that the value of the cryptocurrency has stabilized and they were able to liquidate it.
How is it prioritized? How would this work out? I mean, who gets priority in all this? Obviously, when you have a situation like this, robbing Peter to pay Paul, it's from what I gather is another situation like what we're looking at here. Is this, who gets priority, or is it just working out, liquidating the assets and allocating it based on, everyone it's not first come, first serve, but just divvying it up that way?
Right. So bankruptcy is about making sure that nobody cuts in front of anybody else. If there's a secured creditor, someone like you have a mortgage on your house, they get paid first. But for the most part, the customers are all going to be treated equally. They'll put in claims, and they're treated pro rata. Nobody gets paid more than anybody else. So if there are no secured creditors, and I don't believe there were in this case, then everyone should be treated about the same.
Some recent information came out about how much money has been spent by the new FTX team in sorting out this bankruptcy. I believe the number was $200 million to date. Is that a surprising number for you to hear in a case like this? And how much money do you expect them to spend over the term of this bankruptcy?
Well, it's a surprising number because it's a big number, but in Lehman Brothers and Mr. Ray was involved in Enron, the numbers were a lot higher. As the case goes on and as there's litigations, these are law firms that charge a lot of money. And I think in this case, they've provided their value. I mean, if we now have $7-8 billion, where when we first filed, we had a lot less, then they bring on professionals that know what they're doing and they add value. And the answer to your second question is it'll probably be a couple of $100 million more. But if it gets everyone paid in full, then the money is well worth it.
How liable will some of the employees be? I mean, obviously, Sam Bankman-Fried is the center of the storm, but there are a lot of people who aided and abetted the crime. And Sam, if you're watching, which I think he sometimes watches this show, feel free to call in and say what you need to. But nonetheless, there were other people involved in the situation. How liable are they financially, and how liable is Sam Bankman-Fried financially?
Well, the trustee or Ray can bring lots of claims, and it's entirely possible. I'm not a criminal lawyer, but as a civil lawyer, obviously there's concern about the commingling and breaching of duties of officers and directors. Again, hopefully if everybody's paid in full, this is not going to be an issue, but obviously the report has some damning allegations against Mr. Bankman-Fried and certain other employees. So that's going to be wait and see. The immediate goal of the trustee is to liquidate the collateral. After that, then they'll see about litigations and whether there's other opportunities to collect money.
Just a few moments ago, you said that money, the hundreds of millions, will be well spent if it gets everyone paid back. There is a little bit of a hole here. So I think they said around $7 billion in liquid assets, but about $8 billion in customer funds were not used correctly. That's like $1 billion that they don't have. Who could be at the bottom of the barrel if there are creditors who don't end up getting any of their money back?
Well, so if the creditors aren't paid in full, then equity gets wiped out. So that would be the biggest concern. If that you were a shareholder of FTX, then your shares are liquidated. Your shares are worthless and deemed worthless. So the biggest concern is getting everyone paid in full. But even before they start real lawsuits, for them to be very close is a very good sign that the value of the hard assets, the cash, the real estate, and the liquidated cryptocurrency is bringing them that close is a good start.
And does country matter? I mean, we have, it seems like they had some real estate in the Bahamas. So what exactly does that confuse? Oh boy. Does that confuse? That's all right. As a Pruda moment. Did any? Does it complicate things that some of the assets are physical assets in the Bahamas, such as real estate?
No, that's easy. Bankruptcy has worldwide jurisdiction, and they can bring lawsuits anytime to bring it back in. It's property of FTX, and they can hold it and keep it if it's in their name. If it's in somebody else's name and they didn't pay value, then they can sue to get it back.
And lastly, maybe this is a little bit of a novice question, and you started to unpack this a little bit, but unpack it a little more for us. How much can the findings in this case and this report play into SBF's criminal trial? How much do you expect to see from this kind of overlap?
Well, obviously, the trustee has gone into a great deal of detail, but it's just there's no way of knowing how this affects the parallel federal investigation. Obviously, they're working in tandem together. The feds are letting this go forward. They are letting the feds do their thing. But it's just too early to tell. But obviously, a lot of the findings are, let's just say, might be difficult for the former officers, directors, and shareholders.
Eric, thank you very much for joining the show this morning.
All right. Well, thanks for having me.
That was Wilk Auslander LLP partner Eric Snyder.